Well, happy Tuesday, as I've been calling it this morning, Tuesday, Monday. It feels like a Monday, but of course, yesterday was a holiday. No ag commodity trade, of course. So today is our first trading day of a holiday shortened trading week. And boy, there's a lot to talk about that could be impacting the markets this week. Tim Ross already alluded to the fact that we could have some very interesting complications weather-wise that could impact ag interest not only in the southern U.S. but also the southeastern U.S. as we get about a week out from now. Could have dramatic impacts here on some of the agricultural trade, and we'll talk about that here in just a moment. Let's go to the phones and welcome Rich Nelson of Allendale Incorporated. Of course, Rich is based in McHenry, Illinois, and he joins us right now. And as we get this trading week off to a delayed start here, Rich, what are you going to be focusing on here today?
You know, like where a lot of us are talking about these potential yield scenarios that USDA may be coming out with on that next supply-demand report. I bring this up because analysts have some deadlines to submit their estimates for these news wires. And in fact, today is going to be one of the big deadlines for these analysts to hit. So bottom line here for next Tuesday's supply-demand report from USDA, I think we're starting out this week's discussion with saying, hey, yields might be cut a little bit here. And also we can talk about some good pricing on the export side and see if that develops some type of new orders in the coming days.
You know, Rich, last week we talked about projections for some cold weather moving in. That would be this week and maybe another batch about the third week into September here. So the one that came out of Canada here over the last 24 to 48 hours or so, is it as bad as they had feared or not? It doesn't appear to be.
You know, at this point, does not to be anything that's going to have any major market impact here for us. I think it's one of those things where we'll have to talk about it, and certainly leads us to discussions of future problems if we do get any rebounding cold snap here. But as of right now, I don't think it's going to be a major issue, which gives us a long-lasting up move here on these markets.
Well, let's take a look at our overnight trade here on the Globex market, and just to get everybody updated on the grain markets anyway. And we did definitely have a firmer tone all the way across. Now on the corn, we had September 4 1/4 higher. Your new crop December corn overnight was 3 1/4 higher, with a last trade of 358 1/2. That was about 4 cents off of our earlier overnight low from the Globex market. Now, if you take a look at the soybean trade overnight, here you had September 10 1/2 higher at 952 1/2. Now remember, that's in delivery mode. November, though, not far behind. It's 9 3/4 higher at 959 1/4, and that's within 3 cents of its high of the overnight trade. Meanwhile, on the wheat side of things, here we had a little divergent market again. We had December Chicago wheat 7 3/4 higher at 446 1/2. If you look at Kansas City, we had December trading 444 3/4 on the last trade. That would be up 6. And Minneapolis wheat overnight had December just a little bit higher, 2 1/4 higher at 634. There for a time, it was fractionally weaker. I do want to touch on that cotton market too, because if Irma does come ashore in the southeast, that could have dramatic impacts on the cotton crop. And boy, is that being reflected in the prices early this morning, with December up 169 points at 73.57. Rich, on the impacts of Irma down the road, is that possibly helping to spur the soybean market here this morning?
You know, might be an issue to discuss. You know, for ourselves, we probably won't get too excited about this story really being a major market impacting issue, but I think for the trades mindset, I think this idea of maybe pricing in some risk in what had been a very low risk pricing scenario for this bean market, I think that's probably a very reasonable assumption. You know, we might not see a real impact, but certainly on the risk side might be something needed to price in the short term here.
All right. Well, Rich, if you don't mind, I'll bring you back here in a moment, and we will talk about what to expect in our livestock trade here on a Tuesday as we get the trading week off to a start. We're talking with Rich Nelson. We'll be back right after this. Thanks for joining us here on a Tuesday. I'm Marlon Bowling with you, joined as usual in the morning by Rich Nelson of Allendale Incorporated. And normally we talk with Rich each and every morning about how the markets might open up. And today we're going to be talking here about this livestock market activity. And we were talking right before we came back on live here during the break. This is a very long stretch. If you go from last Friday all the way through Monday, and then there is no overnight trade anymore on the Globex market for livestock. So that's a very long stretch here for analysts to wonder how this livestock market might open up this morning. So what are you going to be focusing on that side? What do you expect to see here, Rich?
For the beef discussion, of course, our general mindset at this time of year, of course, is maybe a little negative. We still have this rising supply issue lined up probably until we get into October. So on the beef side, might still have some slightly lower tendencies right now for the bias right now on the price end. For the hog side, we've got a couple things to discuss. October is going to be National Pork Month, and we do get some procurement going on early on. So I think on the pork side, for this early September discussion, we might see a small tone of stability at least show up here on the pork side.
Rich, isn't it true that the hog carcass weights had picked up again last week?
That's exactly right here. And we've been running roughly about 1% lower than last year in terms of the comparison against last year for almost the entire year so far. We have just recently now flipped to roughly equal to slightly higher than last year. So that certainly has changed here.
Okay, we're looking at our livestock summary from last Friday, according to USDA, and here's the rundown. By the way, on the cash cattle market, the market was roughly about steady at 104 to 105. The dress basis sales on the cattle, the market roughly steady there too, range of 164 to 167 per hundredweight. If you look at the cash hog trade, on a live basis, the market was 61 cents lower at 50.55 per hundredweight, and if you look at the national average on a carcass basis, that market was 20 cents higher at 61.95. That's the weighted average there. I did want to take a look at these pork carcass cutout values and the primal cuts. Last Friday, we had the cutout values 89 cents higher. The loin market up a couple of pennies. Interesting where you had the ham market gaining over $2 in value at 70.71 per hundredweight, and then the belly market gained $1.53 at 127.81. Haven't seen a general across-the-board increase in the primal cuts like that for quite a while here, Rich.
Certainly true here, and I think this might be the issue we have to discuss here on this discussion about procurement for National Pork Month. We should see some stability show up here, maybe not really getting the trade excited here yet as far as that trade on Friday, that higher trade there, but I think we need maybe 1 or 2 more days to convince this market that it is happening and it will be a market issue. So I think is something we'll have to discuss here pretty much most of this week and next week too.
And if October is National Pork Month, the wholesale buying is taking place right now then?
Usually these guys are procuring about 3 weeks ahead of time here in most cases. So we're seeing the very first phase of this start here as of this week, probably not the bulk of it until maybe next week or the week after.
All right, well, Rich, good information as always. I appreciate that as we get off to a new start here on a short trading week here. Rich Nelson happens to be with Allendale Incorporated, and he is based in McHenry, Illinois. We'll be talking with the Allendale folks off and on through the day, so we're just about ready to get started.
All right, thank you, Markets Editor Marlon Bowling.